Hello everybody, this is Jeff, Swing Trade Warrior with DayTradeWarrior.com, here with our weekly trade recap. We had a pretty big week this week. We closed out 3 positions and we finally closed out our USO trade for a nice profit. We'll go over all of those in just a bit. What you see up on the screen right now is our swing trade performance blotter for our swing trade portfolio. Now this is my personal portfolio, and all the trades you see here are for 2015, with the exception of US. So I started that one back in December. Since we started Swing Trade Warrior, early middle January, we're up nearly $10,000. There's 4 or 5 trades that are open right now that are trending heavily in our favor. So I haven't closed those out yet. I'm letting them ride a little bit longer, and we are definitely going to be closing those out next week, I'm assuming, and locking up another few $1,000s. 90% win rate on just 14 trades so far. So the way we do this is we offer swing trading alerts via email, SMS, text, and in the chat room. And Swing Trade Warrior is an absolutely free service. It is provided to all members of DayTradeWarrior.com. So whether you're a day trader or a swing trader, you get both services for one. We offer a free 7-day trial at DayTradeWarrior.com/register. It's no money down. It's just a 7-day trial to come check out the chat room, check out our performance, check out how we trade. We trade live with screen share and on the audio or on the microphone, so it's real-time audio. We don't trade any low float pump and dump stocks. It's all high volume, liquid, small, mid, and large cap stocks. We have over 110 members every day in the room, and it's a pretty interesting community. We have a lot of fun with it in there, and we have a lot of great traders providing awesome ideas intraday, whether they're day trades or swing trades. So we have a really cool community. We're really proud of it, and it is a really great spot for new and experienced traders alike. There's so much education floating around the room, and I think that everybody that's come across finds some sort of value in it. And now that we've offered swing trading as part of that package for nothing extra, it just adds another element, another layer to the program, and gives a little bit of something for people who are more interested in other types of trading. So on the homepage at DayTradeWarrior.com, you'll find my swing trade portfolio blotter. It looks just like this, and you'll also find Ross's Day Trade Warrior day trading blotter with all our trades posted in the same fashion on the main page. And without further ado, let's get started reviewing some of the trades from this week. Alright, the first trade I want to talk about is GoPro. We closed out GoPro on February 3rd, I believe. We were looking for an earnings run up here off of the lows. Now GoPro was curling. This is a daily chart here. GoPro is curling off of these lows right here. If you have been following GoPro since its IPO, it had a pretty exceptional run up to about $98 in just a few months. And once we hit $98 way up here, we saw a massive sell-off. They got hammered by shorts. They had some bad news. They diluted some of their float. So there were a few issues that contributed to the sell-off, but it's been in a strong downtrend all the way from $98 back down to the 50s. And so I figured before earnings, we usually get run-ups in a lot of the stocks. The shorts like to cover. Well, this is one that's been heavily shorted for the past few months, and so that was my intention on this trade, was to play it up to earnings. We had a nice curl off the bottom here. We took a long entry on this trade at 51.30 on January 27th. The next day, we averaged in another half size at 52.90. So our average became 52.40 on 500 shares. Now this doji candle right here was kind of a fake out on the day. What happened was, I don't know if you can see it inside the blue circle, we got a nice spike up all the way to 54 bucks, and then it came in hard and closed right near the open. What happened was the S&P ended up selling off, and the whole market took a dump. The next couple days was no better. The SPY gap down, 30, 40 points, failed to recover at any point, and it was mass chaos and bloodshed, and it was pretty wild volatility-wise last week for the major indices. A lot of FOMC stuff and a lot of crude-related movement in the markets. So what ended up happening is the next day we ended up opening below my stop. So my stop never triggered. I had a hard stop in this trade at about $500 loss. Stop never triggered. Now, ordinarily, depending on how I feel about the trade, I have the ability to scale in, average down, and average up. I always take small size when I'm starting a trade because you never know which way the market's going to go, and everything can be right and go in your favor, and you can still be wrong. If you've been trading long enough, you know that. I've been trading for 8 years, and I know when I'm 100% right, I can still be wrong and lose money. So knowing that, I prefer to scale into strength, and so I always take small starter sizes. I wasn't done accumulating GoPro here, but we ended up getting caught in the sell-off, so I was prepared to average down. Earnings was still about a week away at this point, and I had time for it to recover. I knew all we needed was a little bounce or some stabilization in the S&P in order for GoPro to chill out on the wild swings. Now, it's a high ATR stock, so knowing that going in, high average true range, it's about $3.88 as of close today. Knowing that, I price my size accordingly so I can manage my risk, and I don't take my full size right away until I have some cushion, and I'm playing with house money at that point. Now, I was looking for a run up through this resistance level, right? Your previous support can oftentimes becomes resistance. So I was looking to break through $54 and hold and start a run back up towards 60 for earnings. Well, we never really got there. What happened is we dropped down to 48.80 was the low on the pullback from the crazy S&P gap down days, and I was considering my options. At that point, I was trying to decide between averaging down again or buying some puts and writing calls against my position prior to earnings, just to lower my net average cost. I didn't really want to hold it through earnings because earnings can be pretty volatile, and even though it was only 500 shares, it was still down on the trade more than I was comfortable with, but I was prepared to manage it. I didn't panic. I didn't sell it for a $1,500 loss. I started evaluating my options. I wanted to see what would happen when the S&P stabilized. Well, sure enough, come February 2nd, the S&P clawed its way back up, and it shook off some of the losses. We had a really strong week this week, and we made up a lot of the ground we ended up losing the last half of last week. So we ended up coming back up. I was even on the trade after the first day of this week on Monday. And then on the third, we caught a nice spike, and I sold it for a little over a point. It was a tiny, tiny win. It wasn't my ideal risk-reward setup, but I was just happy to be out of it after holding it for a loser for a few days. So I took my profits on it, moved on to the next, something a little cleaner. The market was just far too volatile. We ended up having earnings. Earnings were last night or after the close yesterday, and I was watching. GoPro gapped up to $62 and sold off all the way down to about $46. So it was a great earnings report, but the market felt that, or other traders felt that it was overstated, and as a result, they sold off. I haven't even read the earnings report yet, so maybe they guided down, I'm not sure. But I'm not interested in it because I'm not in it anymore. The trade is dead to me. It could be a short if you can find shares available under $45, but I'm not looking to short it. I am over this trade. We booked $552 on it, so happy it worked out the way it did. Let's see. One of the other trades we closed out this week was my USO trade. I had been holding this and accumulating it since December. I knew that I wasn't going to be able to find the bottom on my first entry on USO, and I was prepared to hold it long term in an IRA so I could be in a position to catch a nice bounce or reversal in crude. So what happened was back in December, I took my first position. I took 500 shares at $21.50. The trade continued to move against me, dropping down to $20.50. I average down 500 shares for every dollar that the price in USO dropped, and USO tracks crude. So as we know, crude's had a pretty nasty sell-off recently, and I had it averaged down again at 1950. And at that point, I said, well, you know, I'm going to end up accumulating a lot more shares than I'm comfortable or want to hold here. So I've been trading for about 8 years, and I actually started in options. And I used my background in options to lower my net average cost in this position without having to accumulate any more shares. So I began buying at the money puts and equal to the number of shares I was holding, and I'd sell calls into the spike. So every few days that we'd get a sell-off in USO, I'd be collecting money on my puts, and when we had a nice green day or a small pop, I would sell calls, out of the money calls, equal to the same size as my position. These are covered calls, so it's a very conservative strategy, and it's a great way to generate income on a trade that's going against you. So as a result of this, I was able to lower my average down to 1812, and I never had to buy shares. I didn't buy any shares until last Friday. Now what happened was we ended up coming down all the way to 1640. The next day, rig production news came out that rotary rigs had been were in the process of being shut down. They were down like 4.5%, the total number of rigs available in the U.S. because it's not cost effective for oil producers to keep producing oil as the price is dropping. They're losing money on it, so they're shutting down shop to try and protect their margins. And what happened was we got a huge spike back up on USO that day. So on that news, I bought my last 1,000 shares at 1775. It was a little higher than I wanted to buy, but I ended up with an 1812 average after that, long 5,000 shares. And I felt that the news was strong enough and the move was big enough that we could break out of the bottom, or the slide that we'd been in with crude. And the next 2 days, oil shot up. I held through until February 3rd. We saw a high of 2029 from a low a few days previous to that was 1630. So my average was 1812. At one point, I was up over $10,000 on this trade. I wasn't sure if this was just a dead cat bounce or if this was maybe really the bottom in oil. I sold at 1950. I sold 2,500 shares, and I sold, or 1,500 shares. I sold 1,000 at 1995, and then we broke 20. I had another order for another 1,000 at 2050, but we never got there. That day, the high was 2029. So I chose to hold my remaining 2,500 size at 1812 and see what inventories held in store for us the next day. Inventories were released and supply was still up. It was higher than the previous week. So when there's an excess in supply, demand goes down, drops the price. And so I ended up stopping out of this trade. I had a profit stop in. I stopped out the rest at 1844. So I was a little bummed that we didn't get a continuation of this move up right here. I was really looking forward to banking 5 digits on this trade after I'd been holding it for 2 months and managing it with all the options. And it was a lot of work day to day, keeping an eye on this thing. But ended up booking 5,400 in profits on it. And as it came down, I ended up dipping to 1795 was the low. So it wasn't too far past my entry. But after holding it for so long, I wasn't going to take a loss on it. So I took the last off at 1844. And then the next day, we got a pop back up. So oil started moving back up, crude moved back up, USO followed. I didn't get back into USO because I wasn't sure if it was an inside candle until we put in this wick at the end of the day on the top side. So I wasn't sure if we were going to be seeing a continuation or if it was just some sideways movement. The volume was declining. I wasn't sure what to make of it. I wanted to watch it. So then come today, we re-entered USO actually. There was further news out on additional rig production being cut off. So I think we're going to see crude prices squeeze a little bit more as oil producers are trying to stem the production and drive up prices to protect their margins. So we're long USO right now. Again, I took an initial entry size, and we'll see where we can get. If we can break out over the 20.30 level, $20.30, I think we might have finally found a bottom in oil, and we have a ton of room to the upside. I mean, a year ago this thing was trading at just about $40. So I doubt oil will get back to 100 in the near future, but there's definitely a lot of upside to crude, to $60, $70 a barrel. So we booked 5,400 on this profit. I left, $4,000 or $5,000 on the table. A little bummed out about that, but in all, it was a winner. And I wrote a blog post kind of detailing how I managed this trade. I'm going to post a link to it. The link will be to Swing Trade Warrior blog. It'll go into a little bit more detail about how the whole USO thing panned out with a little bit more background on the fundamentals of it. Okay, finally, the last trade I want to talk about from this week was a solid, quiet little winner we had. SLF, Sun Life Financial. Now, I don't find all my swing trades from earnings or news plays. I do have a series of swing trade scanners that I've been developing and tweaking for some time now. I use Trade Ideas Pro for all my scans, and I love them because you can filter for fundamental data as well as social data as well as technical data. So it's a great assortment of tools, and I use them for my day trading and swing trading with much success. This particular trade, SLF, came off of one of those scanners. Now, when I get an alert on the scanner, I always look at the chart first, to determine what kind of setup it is, because you never truly know until you look. I don't just trade blindly off the alerts. So I was happy that SLF was coming off of solid earnings. It put in a nice bottom right here at $30, and we had this nice breakout pattern over the recent resistance level, and it looked to continue higher. It broke through the moving average and the 20 moving average. It was moving sharply up. So I was really happy with the volume, the daily volume. I was really happy with the size of the bars on the move up. We definitely had a lot of momentum as SLF was coming off this bottom right here. So I took an initial position over at 32.06. I wanted to see that $32 whole number hold up, and it was toward the end of the day. I took the position and ended up holding until the next day when I wanted to see us break through the 20 moving average, and I wanted to see that hold up. So I averaged up. Like I said before, I always scale into positions, scale into strength, and I bought in at 32.55. So my average became 32.32, and over the course of that day, we shot up. We saw a high of 33.53. So we instantly got a point. About a point and 30 cents on our move, and I sold half my position at 33.40, locked up a point and a half, or a point and about 10 cents, and I was going to let the rest ride with a profit stop. So the next day, I put my profit stop in at 32.94. Turned out to be an okay spot. I ended up getting taken out, which is fine. I locked up another 60 cents on the trade, and it was a nice $600 winner, $640 winner in about 3 days of work. So really happy with the pattern. I actually like this for another long swing trade. It's flagging right now in the daily. So over the highs, over 33.50, we're going to hit the 50 moving average at 33.75, and then it's free sailing to about $35. So this might be another swing. I'll scale in over 33.50. I'll take a half size on it, and I'll double my position once we break through this 50 moving average, and I'll ride that as long as I can. Hopefully I can sell some up here near the 200 moving average. So that was the trade on SLF. Definitely a favorable play, still holding up nicely despite the choppiness in the market we've seen this week. Now, at Swing Trade Warrior, how it works for our members is we do email and SMS text alerts in real time. As soon as I enter a trade, I post it in the chat room, and I send out an email and text alert all within minutes. We're trading super liquid mid caps and small, mid, and large caps. We're not trading any low float junk or any pump and dump over the counter garbage. So usually there's plenty of time to get an entry on these trades. I always put in there my size, my stop, and my profit target, and any levels I'm looking to add at or scale out at. In swing trading, it's the kind of thing you can't really micromanage. You can't stand over the top of it because you're going to get a lot of up and down movement intraday. So we're playing the trends, and we're playing technical targets. So I define those in the alerts. Every night I send out a watch list recapping the events of the day and our current open positions. We have 5 open positions right now that I'm about $1,500 up on, maybe $1,700 now. And so I'll look to close those out next week. And we're just going to keep doing the same thing over and over again. We have a great strategy and a great system in place. And as I described before, if you want to come in and check us out on a free chat, I'm sure you won't be disappointed. Feel free to ask us any questions. You can contact me. I'll put my email in the link below. It's jeff@swingtradewarrior.com. Be happy to answer any questions about any of these trades or anything else you might want me to take a look at. Other than that, hope you guys had a great week, and happy trading.